Okay, so you have a dividend stock portfolio right now, and you are contributing more money every single month and having more shares and having more dividends every single month. But then the big question becomes, how do we accurately understand what our dividend portfolio is going to look like in the future? What's up, you guys? Welcome back to the Average Joe Investor Channel. My name is Joe, and in this video, I'm sharing with you a new spreadsheet that I put together that helps me forecast what my dividend portfolio is going to look like in the future. Those of you that have been members of the audience for a while know that one of the big reasons why I have a dividend portfolio is because I have some significant cash flow needs in the next 3 to 5 years. This spreadsheet that I put together is going to help us take a look into the future, both 20 years in the future, 10 years in the future, as well as just 3 years into the future to understand what my portfolio is going to look like based on certain variables. You guys know talking about dividend stocks and cash flow and dividend ETFs just makes me super excited, and I want to always deliver massive value with every new video that I make for you guys. So without further delay, let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. Just as a quick reminder before we get started, guys, know that every single spreadsheet that I make is available to every single member of the Patreon community. So if you have interest in learning more about dividend content, learning about what I do in my own portfolio exactly when it happens, my specific dividend portfolio strategies, and access to me to answer any questions that you may have, check out the link in the description below. All right, guys, so here's the spreadsheet. Let me go ahead and explain it to you a little bit. I try to be as transparent as possible with my own holdings in my dividend portfolio. So here it is, guys. Portfolio as of, I believe, end of business Friday was $113,980.69, broken up between 18 I believe? Yeah, 18 different holdings here. So you've got all the different holdings here: AbbVie, Eris Capital, Broadcom, First of Long Island, Gilead Sciences, Manulife Financial, MSC Industrial, Northwest Bank Shares, Realty Income, PetMed Express, Global X, NASDAQ 100, Global X Russell 2000, Schwab US Dividend Equity ETF, Star Group, Store Capital, Unum Group, Walgreens, Boots Alliance, and Westlake Chemical Partners here. And right over here, you can see the current portfolio weighting of all these different holdings. And then right here, the number of shares owned, what their current yield is for each of these dividend stocks, price per share, and the current value within the portfolio here. We're gonna actually use this column right here to manage the amount of money that gets contributed to each of the different holdings in the future. So more on that to come. We've got our monthly contributions right here, and we've got our annual cost of living adjustment for those future contributions right here that we can adjust. Here are the 3 specific time frames we're gonna look at here. We've got 20 years into the future, reinvesting dividends in all scenarios. We've got 10-year future forecast, reinvesting dividends. And then we have a 3-year future forecast, reinvesting dividends. And in parentheses here, it says the RV trip. Just as a quick reminder to you guys, in 2024, right around June, July, our family is packing up and we are taking an RV trip around the country for an entire year. If I'm still working for my employer, I'm quitting my job. Although, to be perfectly honest with you guys, I hope by that point I am exclusively making content for you guys here on YouTube and on Patreon. So this will be interesting here because I know that 3 years is not a long time to compound your dividends. So we're gonna see if we can find some ways to kind of backdoor ourselves into the goals that I have for cash flow for this trip here in 3 years. So 3 years, 10 years, and 20 years. And we're looking at trailing 12 months of dividends, which specifically I mean here, after 3 years, what will the trailing 12 months of dividends be? And then here on the 10 years, it says after 10 years, what would be the last 12 months of dividends in totality? And then here in 20 years as well, then we've got our portfolio value. What will the portfolio value be worth based on some assumptions? And then how do each of these holdings with respect to their overall weighting in the portfolio, how have they changed since when they were right now? Now, you'll notice here along the bottom, we've got a tab for each one of these individual holdings. And I've got the price and the history data here. Let me just scroll over here. For each of these holdings, whether it's Eris Capital, Walgreens Boots Alliance, QYLD, RYLD, etc. I've got the price and dividend history. I'm not gonna unhide them all right now. but price and history data, and then from that we have the price compound annual growth rate here and the dividend compound annual growth rate based on what has historically happened. Quick reminder here, we are making assumptions about the future. We have absolutely no idea what's going to happen with any of these holdings in the future with respect to their prices and what they're going to be worth, as well as whether or not they're going to continue paying dividends. And along the way, I'm going to have to make some adjustments as real time happens. And just for your awareness, every once in a while, some of these holdings had some pretty outlandish, well, not outlandish, they've actually happened here in the past 5, 10, 15 years, but some, I would say, unreasonable price and dividend compound annual growth rates. So when it was outside of the norms, I went ahead and, to be conservative, I brought those numbers down to be in line, just to say that, it's much more realistic that would happen. For example, Westlake Chemical, as you look over here, let me just scroll back up here, you can see here that their actual compound annual growth rate was 10.41%, and their price compound annual growth rate was actually a reduction of 1.83% of the lifetime of this specific stock. But doing that made the numbers outlandish. It brought like the reinvested value up to like $2 million or $1 million, which was not reasonable in my opinion. So in that case, I went ahead and cut it to a 5% compound annual growth rate, and I went ahead and said that there was no price reduction, which would have made the dividends pretty insane. All right, so let's start by taking a look at the 10-year forecast, then we'll look at the 20-year forecast, and then we'll come back to the 3-year because we're gonna end there and see if we can make some adjustments to backdoor into the numbers we wanna get. All right, starting with the 10-year future forecast of reinvesting dividends. For now, what we'll do is we will assume a monthly contribution into the account of $250. Now you should know that I'm starting with the current shares owned. So I'm not starting from zero with each of these holdings. I'm starting with what I actually own share-wise. And then we're looking at reinvesting dividends for that time frame, as well as making monthly contributions, which we can adjust. So now you can see how these holdings adjusted here. So we've got all these different holdings and their current portfolio weighting versus where they're weighted here. You'll notice that, for example, AbbVie is only 5.89% weighting in the portfolio, but if we let things go organically, it would be 10% of the portfolio and worth quite a bit and generating quite a bit in dividends after 10 years. So notice that right now the portfolio is worth $113,000. And actually, I want to show you something real quick here because this is just the power of dividends. Let's go ahead and make this monthly contribution zero. Not doing anything with the portfolio here except letting it grow by itself and reinvesting dividends. Notice here that worth $113 now. And if we look right here, let me go ahead and reveal this data right here. Notice now that doing nothing for 10 years, the portfolio went from 113 to 411. 113 to 411. And currently, I believe my dividends are like $5,000 annually, $6,000 annually. It'd be $12,487 now. That right there, plainly spoken, is the power of dividend investing. Dividends can outperform, especially in sideways markets or declining markets, as long as dividends continue to be paid. Again, just a quick reminder here. Remember, we're only modeling what we think is going to happen in the future. We cannot model realistically with, especially in Excel, a market where it's up and down and up along the way and there's corrections and big ups and downs. We have to just assume straight line growth, which is not realistic. It just gives us a general idea of what we can potentially expect in the future. So no monthly contributions, the portfolio jumps from 113 to 411. If we actually add in some monthly contributions, let's add in $250 a month, and you should know here that with this $250 a month, it is spreading it across all 18 investments based on the weightings here. So 5.89% of the monthly contribution goes to AbbVie. 17.74% goes to Schwab US Dividend Equity ETF, and so on and so forth. If we change that, we can see here that our dividends jump quite a bit. We went from $12,000 to $14,600 annually. And we jumped from, I believe, 411 to 478. And that's all just introducing $250 a month in monthly contributions. If you went insane here, let's say you had the ability to contribute $1,000. We go from 478 to 680, and we're now generating $21,000 annually in dividends. In that scenario, the portfolio yield would actually be 3.09%. Some of the outliers here, Schwab would be worth $134 when it was previously worth $20 and generating $1,400 annually in dividends. Same right here with RYLD actually and QYLD, even though they started at 2.44% of the portfolio and still only worth about that same amount, still generating quite a bit in dividends for us. We've got another 1,000 here with Northwest Bank shares, $2,200 with Aris Capital, $3,700 with Westlake Chemical here based on our assumptions. Let's drop this back down here to $250 a month, and let's pop over here to the 20-year forecasting here. Again, we're just making some assumptions on what's going to happen in the future. We have absolutely no idea. All right, here's our 20-year future forecast reinvesting dividends. Started with 113. Let's actually drop it to no contributions, letting the money sit there for 20 years and not contributing any extra money here. You can see it went from 113 to $1.39 million in 20 years, not making any additional contributions. Schwab's now worth 273. We've got right here worth 225. Is that Gilead? 225. 217 for AbbVie. We've got Westlake Chemical under these assumptions generating $13,000 annually in dividends. We've got $3,600 with AbbVie, $2,700 with Aris Capital, $2,400 here for, what is that, MSC Industrial, and another $2,000 here from both of the Global X funds. In fact, letting this portfolio sit for 20 years would be generating now $34,000. That's nearly $3,000 every single month in cash flow to do with whatever you want. You can reinvest it, you can use that money to live off of. That's some amazing results. However, if let's say we're contributing $250 a month here for 20 years, now the portfolio is worth $1.6 million, generating $43,271 in annual dividends. A good portion of that coming from Westlake Chemical, AbbVie, Aris Capital, as well as MSC Industrial. 3-year future forecast, reinvesting all dividends for our RV trip. What would that actually look like? And we'll see how much we actually need to contribute and how we need to weight our holdings to actually meet our goals. All right, assuming we have right now $113,908, contributing $250 a month, and then increasing that by 2% every single year. In 3 years' time, when we're ready to take our RV trip, we would have $196,000, generating $7,616.76 in annual dividend income. To be completely honest with you guys, that's not gonna cut it. I need more money on a monthly basis from this portfolio in order to live on adequately and to do the things we wanna do on our RV trip. So let's see if we can backdoor here ourselves into understanding exactly what I need to do to actually meet the goals. So right now we're contributing $250 a month on the spreadsheet. Let's go ahead and adjust that upward to $1,000 a month. The goal is to put a ton of money towards this portfolio as much as possible. Starting in the past year, so it's definitely from this point forward, contributing as much as possible to meet our goal here. So assuming $1,000 in monthly contributions, now we're up to a portfolio worth $241,000, generating $9,000 annually in dividend income. Honestly, guys, I'm looking for at least $1,500 to $2,000 per month in dividend income, and we got to do a lot better than $9,000 here. So let's say that I'm able to contribute $2,500. Again, this is short-term sacrifice to meet our goals. So now we're up to $12,000, and the portfolio is worth $331,000. Let's see if we can adjust our holdings here. Actually, let's see how much it would do just to do monthly contributions. Let's pop this up to $4,000 a month, which would be a significant stretch for me. But as we generate more revenue within our household, the goal is to put as much as possible towards this portfolio. If we're at $4,000 in monthly contributions to the portfolio, now we're at a portfolio worth $421 after 3 years, and generating $15,449 in annual dividend income. We gotta get this at least up to $18,000 annually, if not $24,000. Let's go ahead and take a look here at the percentage of portfolio contributions. Right now, this is just matching what our current portfolio weightings are and keeping those steady. But let's go ahead and adjust these. Let's go ahead and focus more of our contributions on the higher yielding companies. Not contributing nothing to the lower yielders, but just saying we're gonna contribute a lot more to the high yield companies, especially as we get closer to when we need the cash. Let's say here we've got AbbVie. Let's go ahead and contribute, we'll say 9% to the portfolio. For Aris Capital, we'll also do 9% there. For Broadcom, we'll drop that down to 2. For First of Long Island, we'll drop that down to 2 as well. For Gilead, we'll drop that down to 2. Then for MFC, we'll go ahead and pop that up to 9 as well. MSC is at 3.37% dividend yields. We'll drop that down to 2%. Then we've got Northwest, we'll pop up that to 9. Let's go ahead and see here. Realty Income, we'll put that at, we'll call that in between. We'll call that a 7. PetMed will drop down to 2. Then we've got the QYLD and RYLD. We'll put those up at 9%. We're gonna drop Schwab down to 2%. And then we're gonna come back here with Store Capital. We'll put that at 2%. Unum Group, 9%. And then we've got Walgreens Boots Alliance. We'll drop that down to 2. And Westlake, we will put that up to, we'll call it 7 as well. That gets us, we can make sure you can actually go to 9% there. And we're essentially at 100%. Let's go ahead and change this to 5%. There we go, 100% here now. We now have popped our income up. Our portfolio is worth now $417, and now our annual dividends are $18,641, which puts us at over $1,500 every single month, which I honestly believe, based on what I know right now and what we expect to do, it's gonna cover at least the RV monthly costs, gonna cover the truck monthly costs, because I'd rather just do monthly costs for this trip rather than put a huge chunk of money down to pay for those free and clear. So by adjusting where we're putting our monthly contributions here, we get much closer to our goal. So what I'm gonna do with this portfolio, guys, is I'm gonna go ahead and keep you up to date and on track as to where I'm tracking for this portfolio. Are we on track to accomplish the goals we have for ourselves in the next 3 years as a family? And then, of course, this spreadsheet will be available to all members of the Patreon community, so it's available right now. Check out the link in the description below if you're new. Otherwise, just log in if you're already a member of the Patreon community and get access to the spreadsheet, both in Excel and Google Sheets. In the very next video we're gonna do this week, I'm gonna talk to you guys about the top 5 high yielding dividend aristocrats out there right now, the top 5 highest yielding companies, and looking back to see whether or not how they've performed in the past, as well as are they a good buy potentially right now. Make sure to leave your 2 cents in the comments below. Let me know what you thought about this video, what other feedback you have for me, what other video types you want to see on this channel, man, everything in between, guys. I wanna hear from you, my audience. I appreciate it. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.